Bring me up to date on the likes of Uber and Lyft. And while we're at it, throw in WeWork.
I think much of the damage to these IPOs was done even before this crisis. It was a coming down to earth of expectations. I don't think this crisis per se causes the sharing economy to collapse. In fact, I don't even see the logic of that. I mean, you're never going to get in an Uber because you're afraid of getting infected. What are you going to do? Take mass transit or a cab? I think the trouble that these companies face is they need fresh capital to keep growing. And if this crisis affects the supply of capital, it'll affect the valuation. So more than people using the product or service, it is survival that's at stake.
You know, it's been, I think you would agree, if you're still with us there, a discriminating market in some ways. Companies like Peloton have done relatively better than some others because people are exercising at home, or Zoom or Slack. These companies seem to be doing better than an awful lot of the other little baby companies or new stars.
In fact, having lived through the 2008 crisis and this one, that to me is the biggest difference between the two crises. I mean, in both cases, markets have been volatile, but this has been a remarkably orderly crisis in many ways, because the kinds of companies that get punished are the kinds of companies you'd expect to get punished. Big infrastructure companies with lots of leverage. And it's amazing how discriminating the market has been in meting that punishment. So I think not only you are the winners that you're pointing to, the ones that you want, but what about companies like Amazon or the companies and Netflix, which seem to have held up really well during this crisis? So I think that this crisis is going to create its own set of winners. Like any crisis, it shakes out the market and changes the business models that companies use.